Hello everyone, this is Marshall Giller bringing you the morning comment for August 13th. Currencies generally remained within their recent ranges yesterday. Pound, Australian dollar, Canadian dollar, and the Norwegian krone all gained against the dollar. The other G10 currencies were really very little changed. There was more of a risk-off mood in the market as stocks in Europe and the US fell, and several of the EM currencies that had bounced back recently declined. The ruble was the biggest loser as oil prices fell sharply. And yet the Mexican peso, another petrocurrency, was the biggest gainer among the emerging market currencies that we track. The news from the U.S. was good, but failed to provide any broad support for the dollar. The NFIB Small Business Optimism survey was a bit below expectations, but within that, the Plan to Hire index rose, which is good news. Then the Job Openings and Labor Turnover survey, the JOLTS report, exceeded estimates. This is all good news on the labor market that should encourage the Fed, yet the Fed funds rate expectations fell by 2 basis points in the long end. Go figure. Still, I think this news confirms what ECB President Draghi said recently about the divergent paths of monetary policy in the US and the UK and the Eurozone, and adds to the dollar supportive news that we've gotten recently. Now, sterling strength stands out as the only news from the UK yesterday was the BRC retail sales data, which disappointed massively. This should have been a negative for this pound. So it looks like the market's anticipating some bullish comments from today's Bank of England inflation report, which is the big event of the day. Unfortunately, Mr. Carney didn't tell me what he's going to say, so I can't tell you for sure. But generally, he's been pretty bullish on the UK economy, so I think sterling could rally. The Canadian dollar strengthened somewhat after Statistics Canada said it will revise its labor market report for July on Thursday, after it found an error in the recent data. The assumption is that the error understated the rise in jobs. So the Canadian dollar may well strengthen in the run-up to this release. Now, I mentioned oil prices earlier. Oil prices fell after the International Energy Agency cut its forecast for world oil demand in this year because of a lower outlook for the global economy. It noted that demand growth in the second quarter fell to its lowest level in more than 2 years. So, well, with the U.S. getting involved in Iraq again, I wouldn't be surprised to see oil fall further as the risk premium in the market diminishes. Elsewhere today, we have retail sales for June from the U.S. They're expected to rise at the same pace in May, which might not give any impetus to trading either way. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, Head of Global FX Strategy at IronFX Global, wishing you solid trading.